In this video, I will show you the most profitable system that allows you to earn consistently in any market phase, whether it's an uptrend or downtrend. I'm sharing this strategy, I could say, from the heart, because this is a secret Fibonacci grid. I will show you the full settings, how to use it correctly, how to enter positions, and how to take profit. This video will be useful for both for beginners who just starting to understand the market structure and trends, and also for advanced traders who want to refresh their knowledge and learn something new. Why? I'm sure you will learn something new, because no course, no training will ever teach you this technology, the Fibonacci grid. No influencers will share it, and even those who know it keep it to themselves, because this system generates profit. Very few people know about this strategy, and I suggest that you go through this video and understand this system. I'll say right away that in our alpha community you can regularly receive entry point setups, explanations, and daily setups for crypto pairs, crypto assets, currency pairs, and precision metals. We also consistently take profit from the market and generate huge returns. And the newcomers who joined us have already made back the cost of joining our community on their first day and are already earning exceptional profits literally in one day. I believe it speaks for itself. You can also join us and review our statistics and results and decide whether to become part of the alpha community. Before I show and teach you how to correctly use this Fibonacci grid, I need to refresh some knowledge for experienced traders and for beginners. It will be available to learn the fundamental aspects required for working in the market. To properly use these tools, you must understand how market structure works, how trend works, what phases the market moves through, and how to identify a market structure break. This is the foundation you need to make money in this market. So to begin, let's outline the market structure. What market structure types do we have? We have an uptrend and a downtrend. An uptrend, it's crucial for each key high to be broken. At the same time, the lows should remain intact. This is an uptrend market structure. In a downtrend market structure, it's the opposite. The lows are broken, but the highs remain untouched. Next, after identifying the market structure, the trend, our task is to detect a market structure break. And many people mistakenly highlight this part of the chart as a market structure break, but this fragment of the chart is called a shift. This is the first sign of incoming counter volume, but it is not an official full market structure break. It's simply the first indication that the structure is about to change. Our actual market structure break will occur from the most important last low, the one that previously broke structure and formed the highest high of this range. Accordingly, here we will have a market structure break once the price firmly closes below this level. This is whether our BOC, breaker structure, appears, to be precise. Now our task is to work with the Fibonacci grid. From the low that broke the market structure, we stretch the Fibonacci grid up to the high. We take our Fibonacci tool and pull it from the low to the high. Our main focus should be on the 141, 161 zone. I usually highlight it with a rectangle for a convenience. Inside this zone, we can safely start building a long position, and this is the more aggressive approach, where you place your long limit orders along the boundaries of this range, both inside and on the edge. The more conservative approach is to drop to a lower time frame. For example, we are now on the 4-hour chart, so we drop to the 1 hour or 15 minutes. Inside this zone, we wait for a break of structure in the opposite direction and form of confirmation, such as an imbalance, a rejection block, and a SNR block, depending on which tools you use. Okay, but let's assume we are lazy traders and we want to work only with limit orders or even at market. So we form our long positions from the zone we identified initially. Our stop loss is placed behind the 200% zone and our take profit is placed at the high of this structure. Before that, we take partial profit at the first problematic zone, the 100% level. This is a mandatory rule. You must partially take profit here in the first problematic area. Next, price develops further. Here we close our profit. Great. We then see a retracement. How can we continue trading afterward? We again take our Fibonacci grid, stretch it from the low to the high, and we see that here we have a perfect setup for catching a scalp long position. As I mentioned earlier in the example, most often the Fibonacci zone 141, 161 reaches at least the resistance zone, in our case the 100% level. This is the zone where the previous structure break occurred. Therefore, here we take at least a partial profit. This way we capture a very nice intraday long, very pleasant and completely workable. Okay. And we see that after we take partial profit, the rest of the position moves to break even. And then price aggressively moves downward again, continuing with the main trend. Okay, we see that our structural low is being broken. This is very important low. Accordingly, we have a significant market structure break. The price has closed below it. So we take our Fibonacci grid. From the main low to the high, we stretch our Fibonacci tool, and we see that the price comes exactly into the 141, 161 zone again, the zone from which we will form our new long position. From here, we enter our long position, place the stop behind that 200% level, and partially take profit at the first problematic area, the point of the structure break, which for us is the 100% level. Here, at the 100% level, and we let the remainder of the position run toward the high. Okay, this part is clear. The exact same logic works in the opposite direction. Even if we invert our chart, we see that structure changes to the opposite. Here is the market structure break. We see that originally we had a downtrend and then it switched to an uptrend. So once again, we take our Fibonacci grid from the high to the low and we see the price range where the market will likely sell or even reverse. From here, we build our short position either with limit orders or by entering a market. The stop is placed behind the 200% level and the target is the break of the low. And the intermediate target is the 100% level. Everything works exactly the same. This Fibonacci grid functions identically to the opposite direction. Now for clarity, let's move to the chart so I can show you this Fibonacci grid can help you in your trading. We see our structural low and structural high. From the low to the high, we draw our Fibonacci grid. We focus on the 141, 161 zone. We highlight this range. This is where we will form our long position, either with limit orders or aggressively at market. It depends on what type of trader you are, aggressive or conservative. We place the stop behind the level marked as 200 and our main take profit is set at the break of the previous high. Partial take profit happens at the level marked as 100%. We take partial profit, secure part of the gains, and we see that price continues toward our target and even hits our main target. Excellent. Here we closed our position and took our profit. Moving forward, after taking profit, we see a retracement, we see a market structure break, because here is our low and the price has closed below this low. Accordingly, we take our Fibonacci grid again and stretched it from the new low to the new high. Let's scroll slightly forward to see the full range. Accordingly, here we highlight this range, and I want to warn you that this Fibonacci grid can be used for swing positions intraday positions, and even for scalping. In this example, we are currently on the 4-hour time frame, so on the 4-hour time frame we mark our zone, then move to the lower time frame, -1 time frame to the 1-hour chart or 15 minutes chart. Here we take our scalp long position. Remember how I said in the previous example that the grid always reaches at least the 100% level. This level right here and here, the same thing happened. It even moved higher, meaning you could have taken the scalp long position. Next, we see that after taking profit, the price goes lower. What happens below? We see that a new important structural low has formed. From it, naturally, we have a market structure break because the price closes below that level. Accordingly, we drew our Fibonacci grid from the low to the high. We see that the price approaches our 141 level, where we can safely start building our long position, with a stop behind the 200% level, a take profit at least at 100%, where partial profit taking happens, which, as you see, has already been hit. And the maximum target will be the structural high. So, at minimum, this is the position we expect, right? As I told you at the beginning of the video, the 141-161 zone is an ideal range where you can at least catch a strong long scalp, a bounce, and at the best catch a complete market reversal and the opposite directional move of structure. Here the position worked perfectly. The price moved further, moved higher. Now I will show you the settings for the Fibonacci grid. You can pause the video, take screenshots and apply these settings to your own Fibonacci tool in TradingView, because this video go apply them and then perform backtests on any chart, any asset, on any time frame, and you see how it performs. Make sure to set everything exactly the same as I have it here. Ideally highlight the 161 and 141 zone separately so your eye can immediately spot this area. This will help you identify it faster and trade it more efficiently. Apply these settings to your Fibonacci grid and write under the video how it works for you and share your results. Thanks for watching. Remember that all the best, freshest and the largest number of setups and daily trades are available in our Otis Alpha community. Link in the description. You're welcome.